What are the best commodity ETFs for diversified investing? Imagine having a single investment that gives you exposure to metals, energy, and agricultural goods all at once. That's the power of choosing the right commodity, exchange-traded funds. These funds track the prices of various commodities, so you don't have to buy physical goods or futures contracts directly. They are a simple way to add commodities to your portfolio and spread out your risk. When selecting commodity exchange-traded funds for diversification, look for those that cover many sectors. Funds that follow broad indices like the Bloomberg Commodity Index include a mix of agriculture, energy, industrial metals, and precious metals. This broad coverage helps protect you from the big swings in any one commodity. Next, check the size and trading volume of the fund. Larger funds with high trading activity tend to have tighter bid-ask spreads, making buying and selling easier and cheaper. This is especially important if you plan to trade frequently or want to keep your costs low. Expense ratios are also key. Funds with lower fees, such as around 0.15%, eat into your returns less over time. Many broad commodity ETFs keep their costs low, making them a good choice for long-term investors. The structure of the fund matters too. Some ETFs hold physical commodities, others use futures contracts or swaps. Some funds use strategies that adjust their holdings based on market trends, like trend following or holding cash during downturns. Understanding how a fund manages risk helps you pick one that fits your comfort level. For example, the Invesco Optimum Yield Diversified Commodity Strategy No K1 ETF, often called PDBSA, offers exposure to a wide range of commodities and avoids issuing K1 tax forms, simplifying your taxes. The Invesco DB Commodity Index Tracking Fund, or DBC, is one of the biggest and most liquid options, tracking a broad index. The Invesco DB Agriculture Fund, or DBA, focuses on agricultural goods, giving you sector-specific diversification. If you want gold exposure, the Franklin Responsibly Sourced Gold ETF, or UFJDOL, is a top pick. It invests in gold with a focus on responsible sourcing. For a dynamic approach, the Duction Auspice Broad Commodity Strategy ETF, or COM, uses trend-following strategies across 12 commodities, aiming to reduce losses during market downturns by holding cash when needed. Remember, adding commodity ETFs to your portfolio can act as a hedge against inflation and provide assets that don't move in sync with stocks or bonds. But keep in mind that commodities can be volatile and affected by geopolitical events, weather, and supply and demand shifts. To sum up, the best commodity ETFs for diversification are those that give you broad exposure, are easy to trade, have low costs, and use strategies aligned with your risk comfort. Options like PDBSA, DBC, DBA, UFJDOL, and COM offer different ways to include commodities in your investment mix and help you build a more balanced portfolio.